Alright guys, so let's get down to it. Let's go to the long setup entry rules and put everything that we've learned together. Alright, so what are the rules? You gotta follow the rules precisely. Number one, so when we go long, we want to see a bullish signal from the 6 EMA crossing above the 18 EMA. Right, you should know this by now. Okay, now we also want to ensure the 6 EMA and 18 EMA are above the 50 EMA, and preferably the 50 EMA is above the 200 moving average. So in other words, we want to upon entry, the 6 moving average must be above the 18 moving average, obviously, because it just crossed somewhere here, right? And it should be above the 50 moving average, and it should be above the 200 moving average. So recall in our lesson of technical analysis, when the moving averages are in sequence from the smallest to the largest, it's a very clear uptrend. So we only want to trade this on a very clear uptrend. Hence, we want to see that sequence of 6, 18, 50, and 200. Comprende? Good. Great. Now, so right at the signal cross, right, the swing high must appear right at or after the bullish signal, and must be followed by a pullback on inside bar. Okay, remember, maximum of 3 pullbacks. Once we have got that set up, we have to check the higher time frame. So recall that we are looking at the 15-minute candles. So the 15-minute candles are on an uptrend, signal a swing high and pullback. We have to then look at the H1 candles, the hourly candles, to ensure the hourly candles are also on an uptrend. So the hourly candles must also show the same sequence, 6 above 18, above 50, above 200. Okay, really important. So once we have that set up, we will place our entry order. So the entry order will be a buy stop order just above the last valid inside bar or pullback. Okay, so recall, right, once we've got a pullback or inside bar, we place our buy order right above the high, okay, of that inside bar pullback candle. Where do we place our stop loss? Our stop loss is placed, and it's going to be a sell stop order, right, just below the lowest pullback candle. All right. So the buy order is at the high of the pullback candle. The stop loss is at the low of the pullback candle. Now, the distance from the entry price to the stop loss price should be at least 8 pips. If it is not 8 pips, just shift your stop loss lower till it's at least 8 pips. Next, we place a target price, which will be a sell limit order 1.5R above the entry price. Okay, so again, recall that 1R is the distance from your entry price to your stop loss price. So we're risking 1R to make 1.5R. Before going into the setup, a few low risk filters. Number one, ensure there's no major news being released within the next 10 candles. So one candle is 15 minutes, 10 candles is 150 minutes, or about 2.5 hours, right? So I'm going to show you to check for major news releases in Forex Factory. Next, ensure there's no significant resistance levels within 1.5 hour of the entry price. If you're entering, you want to ensure you can hit 1.5 hour without hitting any major resistance levels. Ideally, the pullback candles should find support at the moving averages. So hold that thought and let me show you all the examples that meet this criteria. Alright, so let's take a look at the first example. It's a long pound dollar 28 August trade. So as you can see, the signal is the 6 crossing above the 18 EMA, and right at the cross we have got that swing high candle. Okay, so the next candle is a pullback, making a lower high and a lower low. So the moment this candle closes, we've got a pullback, we place our buy order, and we place our buy stop order just above the high of this candle, right? And in this case, it will be at 2892. I'll then place the stop loss right below the low of this candle, which in this case would be 2879. So 2892 minus 2879 is 13 pips. So this, my stop loss distance is 13 pips, or rather the 1R is 13 pips. Let me just write it out here. So this is my 1 hour distance, which is 13 pips. Okay, so very quickly I have to calculate where's my profit target, which will be 1.5 hour above the entry price. So I take 13 pips and I multiply it by 1.5. So that gives me 20 pips, right? Now, if you get a decimal point, just round up to the higher number, right? So in this case, 20 pips. So 2892 plus 20 pips would be 2912. So that's exactly where my profit target will be. That's a sell limit of 2192, right? So all three orders are placed together with a broker, okay? It's a bracket order. So I've got my entry order, my stop loss, and my target price entered together. And once I enter the order, I will let it hit either the target price or the stop loss, either a win of 1.5 hour or a loss of -1 hour. So it's a binary outcome. So it's a find and forget strategy, basically, right? Now, notice a few things as well. As I entered the trade, notice it's on a very clear uptrend because the 6 EMA is above the 18 EMA and it's above the 50 EMA and it's also above the 200 moving average. But you can't see the 200 day because it's right below, but you can see the sequence 6, 18, 50, 200 in a very clear uptrend sequence. Also notice that the pullback candle is finding support at the moving averages. Okay, it is finding support at the 6, 18, and 50, and that gives me more confidence that it's a strong support. The trend's going to continue going up. So this is a trade with one pullback candle. All right, great. So let's look at another example right now. So this is a long dollar yen 30 August trade. Okay, so once again we've got the 6 EMA crossing above the 18 EMA over there. Right at the cross or right after the cross, we must have the swing high. So that's your swing high candle. Right after the swing high, we need to have an inside bar or pullback. In this case, we get an inside bar because it makes a lower high and a higher low, right? So once we get the inside bar, we can place our buy order. So the buy order we place right above that inside bar candle, and the stop loss we place at least 8 pips below, because if you place the stop loss right there, it's probably less than 8 pips. All right, so what happened was I placed the order there and the next candle did not trigger the order. It did not go higher, right? It made another lower high. So after the inside bar, what happened? We had a pullback candle making a lower high and a lower low. So the moment this candle closed, what do? That's right, I shift my buy order down to the high of this candle, which would be in this case 109.80. Okay, and I place my stop loss at least 8 pips below that. So 109.80 minus 8 is 109.72. So that is my sell stop order or my stop loss. So again, this represents 1 hour. Okay, so 1 hour distance in this case is 8 pips, which is the minimum which I've mentioned. And my profit target will be at 1.5 hour. So 8 times 1.5 is 12 pips. So 12 plus 109.80 is 109.92. So my profit target will be there. So once again, whenever I place my orders, I place all 3 orders at the same time. It's known as a bracket order, right? Entry, stop loss, and target price. Once I'm in the trade, it's a binary outcome. I either hit my profit target or my stop loss, and that's it. Find and forget, very simple. So let's take a close look. Upon entry, notice it's on a clear uptrend. The 6 EMA is above the 18 EMA and it's above the 50 moving average. And again, the 200 is below. You can't see that, but it's a clear uptrend. All right. Also notice that the pullback candle is finding support at the moving averages. So again, that is always an ideal situation where pullback candle finds support at the moving averages, right? So in this case, it was a swing high inside bar pullback. Yet another example, long euro dollar 5th of May. Again, 50-minute candles. Let's take a close look. So that's the 618 EMA crossover. That's a signal. So remember that right at the cross, we have got the swing high candle. So this is the swing high. It's a really big swing high. And following the swing high, we've got an inside bar, right? So this is an inside bar making a lower high and a higher low, right? So now, so once you've got an inside bar, could you place your buy order right above there? Well, you could, technically you could, but personally, I would probably not have done that. I did not do that because, you know, it's like a bit overstretched, a bit far from the moving averages. So I'll prefer to wait for a pullback in this case, yeah? So sure enough, it pulled back here. So even if you place your buy order there, which is, I mean, there's nothing wrong to do that, you would not have gotten triggered anyway. So it pulled back to the next candle, and now the buy order would be above the high of this candle. And the good thing is this candle is finding support at the moving averages. You always want some kind of support that's always more convincing, right? But sure enough, the order did not get triggered. The next candle, it went down again, made another lower high, but a higher high. So we've got an inside bar, we've got a pullback, and another inside bar. So the buy order is now there. Okay? So what happened? The next candle again made a lower high and lower low. So we have another pullback. Okay, so sure enough, we shift our buy order to the high of the last pullback candle, which would be this case. Okay, so we've got inside bar, pullback, inside bar, pullback. That's still okay. Remember, maximum of 3 pullbacks, and as long as it doesn't pull back below the 50 moving average, we're good. As long as the 6 EMA remains above the 18 EMA, we're good, right? So our buy order is there at 0977. We place our stop loss just below the low of that pullback, last pullback candle, which is 0969. Is it at least 8 pips? Well, it's exactly 8 pips, right? Low and behold. So again, in this case, my 1 hour, my risk per trade is 8 pips. So I multiply that by 1.5 to get 1.5 hour profit target. Okay, and that will be 12 pips. So 12 plus 0977 is 0989. There we go. So that's my profit target. So again, I've got my 3 orders, entry, stop loss, profit target. The next candle, it goes up, triggers the buy order. Okay, so 1, 2, 3, 4, 5, 6, 7. Within 8 candles, it hits my profit target. I'm out of the trade. Okay, great. So I'm sure you're getting a hang of it. And of course, I'm going to do a live demonstration to show you how in real time I place the trades, how I move the buy orders or the sell orders for short entry, how I calculate my position size. So we do all that in the live trading demonstration section. Now, I know some of you could be asking, you know, Adam, why are you setting a target of 1.5? You know, why not 2? Why not 3? Well, you know, after trading for many, many years, you find that, you know, of course, we want to get a 2-hour profit. We want to get a 5-hour profit. Who doesn't, right? But more often than not, okay, I find that 1.5 is the optimal for Forex. When I trade stocks, I tend to put 1 to 2 or 2.5. But Forex tends to move very rapidly. And what I found is that if you put 2 hour or more, it reduces your win rates considerably. I mean, you may see examples when it runs and it keeps going, but it doesn't always do that, right? I've learned in life not to be greedy. I take a 1.5, I'm pretty happy, and I move to the next trade. As long as my average wins are more than my average losses, I will be profitable. I know that. You know, I don't have to be that greedy. I want to get a big win each time. Okay, just small wins and it accumulates, right? Okay, so that's my long euro dollar 5th May. One more. Long euro dollar 16 February. Okay, again, 15-minute candles. You can see over here. Oops. So there we go. We have got our 6 cross 18 EMA signal. Right at the cross, we have got our swing high. Boom, very strong impulse. So right after the swing high, we have got an inside bar. All right, lower high, but higher low. So once we get an inside bar, again, we could place the buy order right above the high of the candle. So sometimes it swing high, inside bar continues, right? But it did not get triggered. What happened was the next candle made a lower high and a lower low. So we had a pullback now. So inside bar pullback. So I now shift my buy order above the high of that candle, which would be 0977. Okay. And my stop loss would be just below the low of this candle, 0.969. So 0.977 minus 0.969 is 9 pips. So that's more than 8 pips. It's fine as long as at least 8 pips. So we take 9 pips. That's my 1 hour distance. Okay, so what's 1.5 R? 13.5. If you take 9 times 1.5, you get 13.5. So I'm going to round it to 14 pips. So that's my profit target. 0.977 plus 14 is 0.989. So there you have it. I've got my entry, my stop loss, my profit target entered into the system. Next candle, it goes up, triggers the buy order, runs up, retraces, almost hits my stop loss, doesn't, and hits my profit target. All right. So notice it doesn't always go up immediately. Sometimes it goes up, retraces back, goes up, and you never know until it hits something. Whenever I take a trade, I'm always prepared that it's going to hit my stop loss or my profit target. I never know which one's going to be which because every trade outcome is random. Remember that. Okay. So once again, you can see a clear uptrend. 6 EMA above 18 EMA, right? Above 50, above 200. All moving averages are aligned on a clear uptrend. Okay. In this case, you can see that the or rather, this was a swing high, inside bar, inside bar. Yeah, it was not a pullback candle. It's actually 2 inside bars, right? 2 inside bars, and it did not really find support at the moving average, but at least it's near the moving average. That's pretty good. Okay, and so it was a bit of a more risky trade. So notice it went up, came down, and it found the support here and continued. So you always want some kind of support that gives you a bit more confidence. All right. All right. Now remember that one of the filters I use is before I enter a trade on the M15 candles or the 50-minute candles, I will always check the 1 hour candles, which is one major time frame above the 50-minute candles. So if I'm going to go long on the 15-minute chart or the M15 chart, I have to ensure that the 50-minute chart is on an uptrend, right? But I must also ensure that the hourly chart is also on an uptrend. So there are times when the 15-minute chart is on an uptrend, but the 1 hour chart is on a downtrend. In those cases, I do not take the trade. Okay. So for example, in this case, you can see on the 15-minute chart on M15, we see this clear swing high, inside bar, pullback pattern. So I'm going to go long over here, and I see a clear uptrend, right? So 6 EMA above 18, 18 above 50, above 200. So it's a clear uptrend. And what I do is I will then click from M15 to H1 to go to the hourly chart. And you can see that at this point of time on the 50-minute chart corresponds to this point of time on the hourly chart. Okay, it's kind of like from zooming in, you zoom out and see, okay, where are we on the hourly chart? And you can see on the hourly chart, again, it's on a clear uptrend, right? Making higher highs and higher lows. 6 EMA above 18, 18 above 50, 50 above 200. So again, I want to see that sequence on the hourly charts. Really important, very important, right? Here's another example. So here's an example of a trade which I did not take. Why? Because you can see on the 50-minute chart, you've got that bullish signal, swing high, right? Inside bar, pullback, and you say, hey, okay, I'm going to buy over here, right? Pulls back, I'm going to enter while it runs. But at this point of time, if you click on the hourly chart, you find that it corresponds to this point in time over here. So this zoom out is here. So what you notice on the hourly chart, right, the 6 moving average is above the 18, the 18 is above the 50, but it's below the 200 moving average. And the 2-hour moving average acts as a resistance. You can see it's a resistance. And you're entering right at the resistance. So that's not a good idea. So sure enough, when I watched that trade, if you had entered, you had gone up and hit this, this price level and collapsed, you have been losing trade, right? So really important. Next thing which I mentioned as well is before trading for the day, right? At the beginning of the day, always check Forex Factory. If you go to forexfactory.com, look at their calendar of news. And for example, on this particular day, you can see these are all the news being announced and how it will affect the different pairs of currencies. Okay, and all you gotta know is red, yellow, orange. That's it. Okay. Now we're only interested in the red. So red means this news is likely to move this currency violently, either up or down. Now we never know what's gonna happen. So what I do is when I see red news, okay, I do not trade that pair. So for example, when I see that unemployment claims are going to be announced at 8:30 p.m., I'll not put in a trade on any pair that has a US dollar. So whether it's a Euro, USD, dollar, yen, anything of a US dollar, I'm not going to touch that. Okay, because if the announcement comes out and it moves opposite of what I want, I'll get stopped out, right? And that's not a good idea, right? So always check the news and avoid trading 10 candles before the news. So if one candle is 15 minutes, 10 candles about 2 hours, right? So, and if you do trade it, you want to exit before the news is announced, okay? So here's an example of how news can affect the price. So this is dollar CAD, all right, M15 candles, and you can see here, hey, you may have said, hey, you know, there's a signal here, all right, swing high. Okay, by the way, this is not a valid setup, all right? Why? Because the swing high must come right after the cross, or right at the cross. But in this case, you had a cross, you had a swing high, and the next one made a higher high. So this is not valid. The swing high cannot come one candle later. It must come at the cross or right after the cross. All right. But let's assume it was valid. Let's say you say, okay, I'm going to take that, right? And you bought over here, somewhere over here. And at 8:30, what happened? The news was released and something happened. I don't know what the heck happened, right? And the price boom, went all the way down. All right. So avoid trading before news. I mean, it could have gone up, all right, but you never know. And I don't like to gamble, so I like to make sure I go in with the odds in my favor and avoid gambling. Great. All right, so let me give you a little test to make sure that you understand what is a valid setup, right? So take a look at this chart over here, and if you would tell me if it's a valid setup. So over here you got the 6 crossing above the 18 EMA, all right, and you've got a swing high over there. All right, sorry, this is a swing high. Okay, so there's a swing high over here. That's the swing high. And we have got the inside bar, right? So after the swing, I got inside bar. We place our buy order over there. And made a pullback, place the buy order over there. Pullback, place the buy order over here. All right, now, so is this a valid setup? Yes or no? I hope you said no. Okay, it is not a valid setup, right? Why? Because remember, this cannot be the swing high. It cannot be the swing high because the swing high has to come right at the cross or right after the cross, but not any later. Okay, so in this case, the cross was here. So this has to be the swing high or this has to be the swing high. Okay, but in this case, the next candle made a higher high. So this is no longer the swing high. So it's not a valid trade. Make sense? So right after this candle, we had to have a pullback or an inside bar for it to be a valid setup. So, yep, that's not a valid trade. Okay. This one, how about this one? Okay, let's take a look. We have got the 6 crossing above the 18, so right at the cross, or right after the cross, we have got the swing high. There we go, there's a swing high candle. Okay, and right after the swing high, we've got a pullback, right? So pullback, and we can put a buy order over there. Okay, and you pull back again, put another buy order over there, and hopefully it triggers and moves up. Is this a valid trade? Take a few seconds to think about it. Well, the answer is no, it's not a valid trade. Why? Because yes, you've got that signal, you've got that swing high, pullback, but notice it's on a downtrend. We do not want to go long on a downtrend. How do you know it's a downtrend? Because the moving averages are sloping down. Right? You can see although the 6 is above the 18 EMA, but it's below the 50 moving average and below the 200 moving average. Right? So sloping down. So we want a clear uptrend, 6, 18, 50, 200 ideally. Right? So it's not a valid trade. All right, guys? So I hope you understand that clearly. All right, so now that you know about the long setup entry rules, let's look at short trade setups, going short on a downtrend. So for the short entry rules, we are looking at the opposite. We're looking at a bearish signal from the 6 EMA crossing below the 18 EMA. all right? And again, at the point of time, you want to make sure that the 6 EMA and 18 EMA are below the 50, and ideally the 50 is below the 200. So you've got a clear downtrend sequence, all right? So right at the bearish signal, or right after the bearish signal, we need to see a swing low candle. And it must be followed by a pullback or an inside bar. Okay, so recall maximum of 3 pullbacks, but no maximum number of inside bars. Okay, once you see that setup, you have to check the higher time frame. Look at the hourly candles to ensure the hourly candles are also on a downtrend. Right, 6 below 18, 18 below 50, 50 ideally below 200. Okay, so once you see that, you can place your sell order. So now it's a sell stop order that you place just below the last valid inside bar or pullback. Okay, and we then place our stop loss, which is a buy stop order, just above that highest pullback candle. The distance from the entry to the stop loss, again, is known as 1R. And this should be at least 8 pips. Okay, once you got that, put your target price 1.5R below your entry price. This will be a buy limit order, which is your profit target. Okay, so let's look at some charts so you understand what it really means. So again, low risk filters, ensure there's no major red news going to be released in the next 10 candles. Check Forex Factory. When you're shorting, ensure there's no significant support level, right, that could prevent you from reaching the 1.5R target. And ideally, when it pulls back after the swing low, you want it to find kind of resistance at the moving averages. That is ideal. So let's look at all the cases where these conditions are met. Okay, so first one is short dollar yen 28th of July. All right, okay, so again, 50-minute candles. Where's our signal? There's our signal, right? So 6 EMA crossing below 18 EMA, that's our signal. Right at the signal or after the signal, we have the swing low. There we go, swing low there. Okay, so right after the swing low, we need to have an inside bar or pullback. So in this case, we get an inside bar, right? That makes a higher low and a lower high. Okay, so we can place our sell order right below the low of that candle. So it swing low, inside bar, continues. But what happened the next candle? It pulled back. So after the inside bar, we had a pullback candle that made a higher high and higher low. And it's now testing the moving average. So good resistance, right? So now we place our sell order right below the low of the candle. In this case, you'll be sell stop order at 11104. We then place our stop loss, which is a buy stop order, 111.17. So again, what's the difference? You take this minus this, you get 13 pips. So is it at least 8 pips? Yes. As long as at least 8 pips. Okay? So 1R, our 1R risk per trade is 13 pips distance. So 1.5R would be 13 times 1.5 round to the nearest highest factor is 20 pips. So you take 11104 minus 20, you get 11084. So that's our profit target, our buy limit order. Okay, great. So what happened? The next candle, it went below that level, triggered the sell order. 1, 2, 3, 4, 5, 6, 7, 8 candles later, hits our profit target. We exit with a 1.5R win. Again, is this a low risk trade? Yes, because it's a clear downtrend. 6 EMA below 18, 18 below 50, 50 below 200, all sloping down. Clear downtrend. Again, you have to check the H1 candles. H1 hourly candles must be on a downtrend as well. Finding resistance at the moving averages. That is also an important feature. Next one, shorting Aussie CAD, 31st August. So once again, let's take a look. M15, 6 crossing below 18. Right at the cross, we've got the swing low candle there. Right after the swing low, we have got a pullback. Higher high and higher low. So once we've got a pullback, we can place our sell order right below the low of that pullback candle. In this case again, you'll be 9894. we place our stop loss above the high of this candle. Now in this case, if you did that, you'd be only 6 pips. So 6 pips is too short. I'd say at least 8 pips. So raise the stop loss to 8 pips. So you get 9894 plus 8 is 9902. So our stop loss is somewhere over there. Okay. So again, 1 R is 1 R, 8 pips. So 1.5 R is 12 pips. So my profit target will be 9894 minus 12, 9882. So again, I place 3 orders at the same time, bracket order, entry, stop loss, and profit target. Once I'm in, I wait for the trade to trigger and fine forget, hits my profit target or my stop loss. So the next candle, what happens? It opens here, goes down, triggers my order. 1, 2, 3, 4, 5, 6, 7 candles later, it hits my profit target. All right, which is about an hour or so. All right. So again, you can see clear downtrend. Moving averages are sloping down. Okay, and finding resistance at the moving average. All right, classic setup. Let's look at one more. Short pound dollar, 21st of September. Again, we see the 6 crossing below 18. Right after the cross, we've got a swing low. After swing low, we've got an inside bar. So initial sell order will be there. Next candle doesn't get triggered, makes a pullback. Higher high, higher low. Shift the sell order there at 3488. Stop loss right above the high of that candle, 3496, and the difference is 8 pips. So again, profit target will be 1.5 times 8, be 12. So 3488 minus 12, buy limit 3476. This is my target price. This is beautiful. The next day, the next candle opened here, went down, hit the sell order, and hit the profit target in less than 5 minutes. I remember this trade really well. Very nice. Okay. So again, very clear downtrend. Moving averages all aligned. Okay. Great. So I hope you get it, right? Again, review this as many times as you need to before you understand this concept. So once again, when doing a short trade on M15, always check H1 on a downtrend. So again, 50-minute chart, we're entering here after the swing low, pullback, pullback. So right at this point, if you click on hourly candle, corresponds to this point over here. And again, it's on a clear downtrend. You can see the 6 below 18, 18 below 50. All right. Now I know the 200 is over here. Ideally, I want a 200 to be above, so this was a bit more risky, but I had a pretty good buffer before it hit the 200. Because remember, these moving averages act as support and resistance. So if the 200 was closer, I would probably not have taken this trade. But it's far enough, I would take this trade, and sure enough, it slammed to the 200 moving average. Okay, so let me test you, is this a valid short setup? Would you go short on this M15? Let's take a look. So there we go, 6 crossing below 18. This is our swing low candle. Okay, and we've got an inside bar. So would you place your sell order over there? Okay, and pull back, would you place your sell order here? Would you place your stop loss here? Yes or no? All right, so ready? I'm going to give you a few seconds to think about it. Would you take this trade setup? So your answer is that your final answer? Okay, I hope the answer was no, it is not a valid setup. Why? Although it's a swing low, inside bar pullback, but it's on an uptrend, right? We want a short on a downtrend. Okay, how do I know it's an uptrend? Well, it looks like an uptrend, right there, it's going up. Okay, but the moving averages, the 6 and 18 are above the 50 moving average. And the 50 is, above the 200, so it's an uptrend. You don't want to short that, okay? So no short, no short. How about this one? Now here are a few potential entries. Let's look at the first one. Now here you can see, again, the 6 crossing below the 18. So right at the cross, or right after we've got this candle, and then a lower candle. So is this a swing low? No, this can't be the swing low, right? Because the swing low must come right after the cross. This was one candle later, it is not valid. Plus, the 6 and 18 are above the 50 moving average, so it's not a clear downtrend, so that's not valid. How about this one? 6 crosses below 18, swing low, right? Is this a swing low? Inside bar, would we place a trade here? Would you sell here or sell here? No. Why? Again, it's not a clear downtrend because these two moving averages are above the 50, right? How about this one? So this was the signal, 6 cross below 18, right? And right at the cross, or right after, we've got this candle, and then the next candle makes a swing low. So is this a swing low candle? Yes, yes, yes. No, this can't be the swing low candle because swing low candle must come right at or after the cross. This came one candle later, that's not valid. So neither of these are valid trade setups. All right, guys? Okay, so I do hope you understand. If you don't, again, send me an email and I'll make sure that you get it. Now, notice that for this strategy, our stop loss is pretty close. It's like 8 pips away, 10 pips away, and our profit target is like, 10, 15, 20 pips away. So because of that, for this strategy, we want to ensure that when we trade, the spread between the pairs should be less than 2 pips ideally. Okay, so it's important to use a broker with very tight spreads. If you use the wrong broker, they have wide spreads, and it's really hard to make money. All right, so in this case, you can see on Euro USD, is the bid. This is the bid and the ask price. So the difference between the bid and ask, all right, is 1967 and a half and 1968. So the spread is only half a pip. That's ideal. Okay. Dollar yen, 23 and a half, 24 and a half, 1 pip spread. Ideal. All right. So you want tight spreads. We'll talk more about this in using the right brokers in the lesson to come in a while. Okay. Finally, risk and trade management. I know I've mentioned it a lot, so let me just mention it again. Okay. There's no right or wrong way to trade. But my preference is a fire and forget system because once I enter the trade, I don't like to stare at it. I like to just enter it and do my own thing and either let it hit my target price or my stop loss price. Don't think too much about it, right? So once I'm in the trade again, I either wait for it to hit my 1.5 hour target or -1 hour stop loss. So it's a binary outcome. Now, some people ask me, do I shift my stop loss if the price starts moving in my favor? I don't do that for Forex. I do that for stocks, but not for Forex. Because Forex prices are very volatile. I found that when I shift my stop loss to protect my profit, I tend to get hit and it moves in my direction and I miss my 1.5 hour target price. All right, so I keep it simple and that's it. All right, great. So this concludes lesson 5, the impulse pullback strategy. I hope that you enjoyed it. Okay, and again, I'll see you in the next lesson.